Our focus has been on the deals with China, but let's take a look at the U.S. markets and how things are shaping up down there. And our next guest sees that while overall U.S. unemployment rates fell, the majority of the decline was due to increased retirements and recovery in government jobs. Let's get more on this and the latest in the markets with Michael Green, Chief Investment Strategist at Simplify Asset Management. Michael, thank you, as always, for joining us.
It's a pleasure to be here. Thank you for having me.
So you're a little worried about those employment numbers.
I am a little bit worried about the direction that the employment is going. In particular, we're seeing the college-educated individuals in the United States are experiencing very high levels of unemployment relative to their own history. That is really going to be the key component that colors a lot of what happens over the next couple of months, whether the Trump policy plan to effectively reshore large elements of trade to invest in capital in the United States, where we have significant infrastructure and in particular energy needs, that is starting to pick up. And we are starting to see signs that that is having an impact in various sectors. At the same time, we are seeing government slow down significantly in terms of expenditures and hiring. The states are under increasing pressure, as we're seeing with California threatening to increase a wealth tax. And I think broadly speaking, the general concern in the economy from voters is largely about employment, much less about things like China, which I know you've been talking quite a bit about.
Now, we did see the industrial production jump 0.4% for December, but one Bloomberg economist say it actually reveals weaknesses below the surface. Your thoughts on that number?
Well, I think that's actually exactly the right way to think about it. We are definitely seeing, particularly in electricity production and in the utility sector, that increased demand from power coming from data centers is driving investment. It is capturing the attention of the administration here in the United States. Donald Trump has announced that the AI companies and data centers are ultimately going to have to fund their own power contracts by signing effectively debt agreements, take or pay power contracts for extended period of time. If you're OpenAI, for example, without a publicly traded security or significant debt outstanding, that could prove challenging. Ultimately, it means it's going to rely on the independent power producers in the United States to produce additional power at basically today's prices, exposing risks across a couple of components. But that is really the only area that we're seeing significant growth in the United States. And it remains a key question whether that will translate to significant productivity increases and the ability of the United States to effectively restructure itself away from largely financialization towards actual production, development, et cetera.
And I mean, America was a production giant, and it still is. Do they have the ability to ramp that up, do you think?
I think the United States does. And candidly, I heard your earlier conversations about Canada and the recent trade agreement with China. I think what is happening in Canada, this plan that has been announced by Carney, it effectively establishes him in opposition to Trump, which plays well to a populist base. At the same time, he's further cementing Canada's trajectory that the United States unfortunately adopted in 2000 when the China shock ultimately hit. There's effectively a de-skilling that's going on within Canada's exports, where you're emphasizing agriculture and effectively a ceding that your complex auto industry is up for sale. That's gonna create many of the same challenges in Canada that the United States has had to absorb for years. We've seen a deindustrialization in our trade policy. Some of that is because the United States was a very expensive place to do it. Others were strictly choice. And I think Carney, unfortunately, is making some poor choices right now.
What do you think? What kind of a reaction do you think we'll hear? I mean, I'm surprised we haven't heard anything yet from the president on this. But does this play into his wanting to bring manufacturing back home? And what do you think, or do you think, and he'll be actually happy with this move, or is he going to be upset with it?
I think, unfortunately, there's two components to it. One is if you expect a reaction and you expect somebody to be angry, remember, revenge is a dish best served cold. The fact that Trump hasn't responded suggests to me that they're taking this very, very seriously. The second component that I would emphasize is, unfortunately, we would love to have Canada as a strong partner of the United States. It does play very well to be viewed in opposition to Trump. He's a polarizing figure. I object to many of the ways that he presents things, but at the end of the day, he is in many ways representing both the national security interests and economic interests of most Americans when he focuses on this, and that is the job he is elected to do. Again, I think Canada is making a short-sighted choice both in economic development and in political relations, but I understand why it's happening. And unfortunately, I think ultimately the response from the administration is going to be a combination of, well, we gave you an opportunity and therefore we're going to effectively put in 232s and potentially challenge even NAFTA itself. That would be really catastrophic for Canada if that's the posture that the United States government chooses to take.
But can Canada? What should they do? Should they just roll over, or do they have to present a stance? Does Trump like a challenge and respect that, or should Canada be rolling over and taking whatever is offered to them?
What I would love to see is Canada actually presenting a principled adoption and understanding of this. There are many, many ways that the United States, as I said, would like to work with Canada, whether it's in the energy sector, the agriculture sector, and candidly in the manufacturing sector. The ability to friendshore many of the activities that are happening elsewhere is certainly something up for grabs. I can't tell you exactly how Trump is going to respond to this. I'm certainly not the man himself, and nor do I have a direct line to him. But this does feel like it's much more about personalities than it does about economic rationale. At the end of the day, Canada is very, very closely linked to the United States, both in terms of market integration and geography. It doesn't make a lot of sense to choose allies that are on foreign soil across an ocean. And that have expressed significant opposition. At the end of the day, Canada wants to produce and sell products, and they want to consume products that are valuable and relevant to the Canadian population. Right. There is no empire that has a production center like China at the center of it. Rome does not ship its goods to Persia. It ultimately imports things because it is done more cheaply in foreign provinces. Canada, in many ways, represents the exact same phenomenon as we had within the Roman Empire, and really should focus on aligning itself much more with the United States.
All right, I have to wrap it up there. I would love to continue this conversation, but Michael, thank you very much for joining us.
Thank you for having me.
Michael Green, Chief Investment Strategist at Simplify Asset Management.